Hey everyone, this is Kirk here again at optionalpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our website. And tonight's a little bit different because we made a slight tweak to the way that we show our trades just to help clarify a lot of things that we're doing. So again, using a lot of the feedback that you guys are giving us, which we always appreciate. Honestly, I take everything to heart and definitely use the pieces that I think are going to be most beneficial to everyone. But we had a lot of confusion usually about opening trades versus closing trades and or adjustments, whatever the case is. So what we did is we actually broke out right here in the membership side of our platform the trades that are opening trades. So opening trades here at the top. So these are new trades that we're entering, obviously. Closing trades when we closed out of a position completely, or down below here, now you see that we have adjusting trades. So adjusting trades would be hedges that we have on current trades that are in the market. So as a reminder, if you see a trade alert that comes out that says opening hedge or closing hedge, whatever the case is, that does not mean that you should necessarily open that position as a new position or close it out as a current position. Those are only for positions that we currently have open where we're making adjustments or making hedge trades to that position. So again, if you're brand new, and I know we had a ton of people sign up again this weekend, if you're new and you're seeing a lot of these hedge trades come out, just go ahead and skip over those and you want to start fresh with the new opening alerts that are sent out whenever they are during the week. So again, let's just kind of go over some of the opening trades and then we'll work our way down through closing trades, and finally we'll spend a lot of time tonight on the hedging or adjustments. Now this video is going to be a little bit longer, so again, bear with me as I go over all these. I want to make sure I have plenty of time to go over all of the trades that we made here today. So the first one that we made is WFC, and this is Wells Fargo. So a lot of these trades today, WFC, EWZ, and COF, these are all very much the same style of trade. I mean, they're all debit spreads. And basically what we want to do is just play a little bit of directional movement in the market. Now, Wells Fargo, which is this one, and COF, which is Capital One, are playing the financials to the downside. So, and I'll show you a chart here of Wells Fargo in a second, but you can see that these stocks have had just a huge run. And not to say that they are going to turn down because we don't know what the market's going to do, but at least at this point, you can't just shy away from these things and saying that they're going to continue at least at the same pace that they're going right now. So we're definitely placing some pretty heavy bets in financials turning around here as we get into the latter part of June and July. So for WFC, we went ahead and bought the July 55.50 put spread for 237. And this is actually a little bit less than mid price, but the reason that we did that is to get a break-even price very, very close to where the market was trading for WFC. And a lot of you who are in my premium coaching program, you definitely understand this. For those of you who aren't, I'm going to go over it here in a little bit for WFC. So here is a chart of WFC, Wells Fargo, and you can see that the stock has just had a huge, huge run up in the last month and a half. And again, not to say that this can't continue at this rate, but I think that the odds are definitely favored for at least some sort of pullback coming around soon. So as we get into the latter part of June and July, I think at some point we're going to have the stock continue to move down. And so what we're doing is basically placing a line in the sand, placing our bet right here. We want to get our break-even price as close to the market price as possible and saying, you know what, at some point between now and July expiration, which is right here, that we have a downturn in this thing, at least partially. And so that's what we're doing, is making just a strategic bet on a down move in Wells Fargo. Now, if we actually go to the July tab, you can see that our position is up about $4 on the day. But here's the reason why I went with the 55.50 spread. And even though I paid a little bit less than mid-price, it was because of where the break-even point is. So I just want to go ahead and just enter this order here just as a sample, just so you guys can see where we are. We paid about 237, and you can see the spread is trading for 241. So let's just move it down to 237 just for the sake of this argument, and perfect. So what I talk about here with debit spreads is that you want to have your break-even price either at or above for put spreads, and we'll get into call spreads here in a second, at or above where the market is currently trading. So you'll notice here that the underlying is trading at 52.51. Now our break-even price based on the risk reward of this trade is 52.63. So we actually give ourselves a little bit of a cushion in the price of Wells Fargo. So even though we paid just a little bit less, this actually gets us a closer break even. It actually gives us a little bit of cushion between the price movement in Wells Fargo. Now, if I had, for example, went ahead and bought the 55.52.5 put spread, which is going to be the one that's about one strike here wide. So the 55, 52.5 put spread, which kind of really straddles the market here. You'll see I paid 174 for that spread if I did that. So you'll notice that now we have a break-even price of 53.26. So much higher than where it is right now. But here's the thing, you only get compensated about $76 on this trade if everything goes right. So you're not really making a 50-50 bet, even though the stock is trading right near your long strike at 52.5. So you're not really making a 50-50 bet, even though the market is giving you those 50-50 odds. So again, go back, reference our coin flip study that we do on the website. You guys will really understand what I'm going through here with the logic. Okay, EWZ is another big ETF. We went ahead and traded the long side of this one, so the call side. Went ahead and bought the 49.50, so very simple, small spread. The 49.50 is only $1 wide. Ended up paying a 47-cent in debit for that spread, so not a bad price for that one at all, and basically puts our break even at 49.5. Really what we did with EWZ, and I won't get into the pricing in this one, is that we actually are just going long the breakout. So the stock had a nice breakout here, and who knows what's going to continue here, but it has gapped up the last 2 days. And so you know what, we're going to say, all right, let's continue with this trend and hope to see the stock continue to move higher through June and July expiration. So again, just playing the market in a different direction. All right, and then finally on the opening trades is Capital One. So Capital One is, again, another one of these financials that has had a huge run up. We did virtually the same thing with Capital One as Wells Fargo, bought the 85.80 put spread, paid $2.49, so almost practically right at midpoint. That puts our break-even price at about 82.5, so that's where we need Capital One to trade below between now and July expiration. And again, you see here's the chart of Capital One. Had a huge run up in the stock, and you can see it's just gone exponential at this point. So again, not to say that this stock will definitely go down, but you just have to place your bets, right? If you looked at this chart and said, you know what, the market's going to be cyclical at some point, where would you expect the market to go? Now, if you're bullish on this stock, go ahead. By all means, trade this thing bullish, but we're placing our bets just a little bit or on the other side of the market, saying, you know what, it's had a great run, and that's fine, but we think that at some point it's going to have a move down, and that's going to obviously give us an opportunity to make a profit. So remember that our break-even price is 82.5. So that basically puts our break-even price just above where the market's trading right now. And again, just like the Wells Fargo trade, the reason that we did the 85.80 is to get that break-even price just slightly above the market and make more of a 50-50 bet on this trade. So we're trading pretty good here and entered it with pretty good pricing. I'm really excited about those trades. All right, so let's go down and talk about some of the closing trades that we made today. So Oracle is one of those trades that we closed out today to profit. This is one of our debit spreads. We went long Oracle, the 41.43 call spread, put our break-even price a little bit over 42, and ended up selling back this spread to the market for $1.20 credit. Again, with these debit spreads, it's just a means to stay active. So you see that a lot of these ones like Capital One and Wells Fargo, etc., we're only trading small lots here. So just a means to stay active in the market during these low implied volatility times. Oracle continued to move higher, obviously, with the general market. So that obviously really helped our trade out. We could have obviously held this thing much longer than this, but here's the thing. Implied volatility has started to rise, which is great. We have earnings that are coming up on the horizon, so we don't want to get caught in that situation. So we're kind of looking forward here and saying, you know what, the stock has had a pretty good move into earnings. We've made a little bit of money on it. We don't want to get caught with our pants down necessarily with a big move in either direction after earnings. So the stock did exactly what we thought it was going to do. It moved higher, implied volatility moved higher, basically did everything that we wanted to do short term. So at least at this point, we just got to take the trade off and take the profit and run with it. All right, so the next trade that we closed out today is a loser, and that is Caterpillar. So Caterpillar, we did have an opportunity to close out this trade earlier this month, but just couldn't get the fills into the market, and that's just sometimes how it goes. But we went ahead and sold back to the market our 3 calendars that we had for July, June, and the 100 put strike. Caterpillars just continue to move higher with the general market. So went ahead and sold that back for a little bit of a credit so that we didn't take a full loss on it. Ended up with a $53 loss on each of those spreads. But basically what happened with Caterpillar is that the stock continued to move higher. And again, just like we see with a lot of financials, it just made a huge move higher in the last couple of days. Really just kind of ran away from us. There's nothing we could do to adjust it. Just wasn't any pricing that was left in it. It's kind of dried up a lot of the options with the move that it had. Now with our calendar, we were kind of targeting this $100 range. So if you go back to the first video that we did on Caterpillar when we entered the trade, had a good opportunity and the stock was kind of moving down that direction, but just didn't really get inside that $100 range that we needed. But again, at the time that we made the trade, we needed some kind of short positions in our portfolio, so that did help us out for a little bit, but ended up turning right around with the general market and working against us. But no big deal, small trade, so we're out with a $53 loss on that. All right, so let's get into some of these adjustments or hedges. So these were really, really popular today as far as comments and emails that I got back from everyone. The first one I want to go over is this XRT trade. So XRT has been quite a good trade for us, and I think it's still going to end up being a very, very good trade for us. What we ended up doing is going ahead and rolling up just our put side that we were short. So we basically have more or less a strangle in XRT. We do have a long call spread position from the original, but we more or less have a strangle in XRT. So we're naked on either ends, both on the call side and on the put side. Now, as XRT rallied today, we went ahead and closed out of our 84 short puts and re-entered the 86 long puts. Now, when you actually enter that order into the system, you basically have a vertical spread, because you go short the 86 and go long the 84, but your long 84s basically close out your existing short 84 position. So at the end of doing that, we took in an additional credit of 68 cents. So as I continue to preach, if you're going to make adjustments or hedges, move your positions in, just make sure that you do that and take in a credit. Now, at the time that we entered this trade, XRT was trading right about 86. So we were kind of making a very, very close bet to the trade or to the market. And the reason that we did that is because we wanted to recenter the trade in the portfolio. So you see that XRT has made a little bit of a move outside of the range that we wanted to be in, and it did come down today, but it was trading right about 86 when we actually entered this spread. So by going ahead and rolling up our put side trade, we actually took in more credit by rolling it up, saying that if XRT continues higher, we want to use that credit to help widen out our break-even price on the underlying stock. If we actually go to the Analyze tab here, if my computer will work a little faster, you'll see that now we have this strategy that's a little bit more centered on where the market is. So if I kind of widen this out here a little bit, you'll see that we have a very nice looking strangle. That's basically the nice strangle platform that we have, or diagram that we have. And you can see that by going ahead and selling the 86 today, which is right here, we basically kind of recenter the position around the stock. So we do need the stock to continue to move down. We basically locked in a gain, which this chart doesn't show. It doesn't show the extra gain that we've locked in on the 84 puts. It doesn't factor that into the analysis here for profit and loss. But basically, we've recentered the trade. It did look a little bit like this earlier today, where it actually came down right about here. So we actually had the trade that was kind of starting to lose money above this price point. And by going ahead and selling that 86, we were able to then widen out our break-even point up to a little bit over 86, at least on this chart. With the actual credit that we received from the original trade, that break-even point is more like 86.5, 87. So we're very wide on this thing right now. We definitely need it to come down just a little bit, but if we need to continue to roll this thing higher, we will absolutely do that and continue to manage the position all the way through expiration. For the RUT trade, this is a very interesting trade and a great example of why I'm 100% open with all of the trades here at Option Alpha, because this is a trade that I had legged into a roll and didn't get filled today. So I actually have kind of a funky position on right now, and you'll see it a second here in my chart, because I didn't get out of the other side. So again, to recap these RUT trades that we're making, because we've done a lot of these hedges, continuing to take in a lot of credit. What we did today is we opened up a new trade where we sold the 1150, 1145 put spread. Now, yes, that is at strikes above where our call spread is. So we are now inverted on our RUT Iron Condor. So our RUT Iron Condor does not look like a regular Iron Condor anymore. It looks like an inverted spread or an inverted butterfly, basically. We have basically risk between our put spread and our call spread now. But that whole area of risk is actually well below the market. So we have an opportunity here to, again, take in more credit and possibly turn this thing all the way around if we can actually do it at a good price by getting out the other side and actually turn a profit on this thing, even though it's gone against us the entire month. But if nothing else, we've obviously reduced our risk on the entire trade by taking in credit all the way. here's the issue that we had today, is that we entered this new trade assuming that we would get out of the other trade, and we just haven't been able to get a fill to get out of the current put side position that we had. So our ideal situation was that we rolled up this entire side and we split that roll into two orders, one closing order and one new order. Well, we only got the new order filled, which is this order today, to sell the 1150, 1145 for an 85-cent credit. So what we want to do tomorrow is continue to work at buying back that other side of the trade for a credit less than 85 cents, so that our net credit, or I'm sorry, for a debit less than 85 cents, so that our net credit or our net income on the roll is a credit that we didn't pay to roll this option up. So here's a chart of, or here's the risk diagram of RUT, and you guys can see it's got this funky position right now because we did not end up closing out this side of the trade. So we still have working, which is not working to our advantage, at least at this point, our 1145, I'm sorry, our 1130, 1125 put spread. So we still have that put spread working. The 1130, 1125, you can see, which is down here. This is why this side of the profit loss diagram is still kind of tilted, because we have that. But our ideal situation is that we close out that trade all together tomorrow, close it out for a small debit, buy it back, and now we have this kind of inverted spread working in RUT. So what I'm going to do is I'm actually going to go ahead and uncheck these two boxes so that you can see more or less what the actual position looks like inverted. And it does look, like I said, like an upside down butterfly, right? So a butterfly usually has that big peak and is equal on both sides, but now we're inverted on our profit, or on our Iron Condor originally in RUT. But you'll notice that RUT is actually trading way over here at 1175. So going inverted is not necessarily the best thing that can happen, but in this instance, we actually have an opportunity to take in more credit, and we're still far enough away from the market at this point that it's not going to affect us even if RUT goes down. So RUT is still up here at 1175. It's got to go all the way down and close right between 1140 and 1150 with no adjustments along the way by us for us to actually lose money on this trade. So again, if nothing else, we basically reduced our risk to the upside because we basically have no additional risk or downside risk to the upside now, and we've increased our credit. So all of that is doing is taking in more credit, giving us a better opportunity to make some money on this trade, and we'll continue to monitor this and possibly even roll it again and go even more inverted as we get closer to expiration. The whole idea here is that if RUT continues to move higher, we obviously want to continue to roll and taking credit and see if we can't turn this whole trade around, which would be awesome if that really happens. But that's what the RUT trade should look like. Again, right now it looks like this, for those of you who are following the alerts exactly, because we have this other put side that we haven't closed out yet. So again, all we want to do is just roll this side up to here, which is what we did, but we just haven't had a chance to close out this leg of it yet, which we will absolutely try to close that out tomorrow or the next day, see if we can't get some fills. So as always, I hope you guys really enjoy these videos. I know this one was a little bit longer. We had a lot more trades to go over. It was a very, very active day. Implied volatility is still crazy low. The market is still rallying up, so you got to be calm out there. Just understand that at some point we're going to get really good opportunity to sell some premium. But for now, we just got to stay active with some of these debit spreads and some of these calendars. Just make things really, really work in our favor and continue to grow and understand the market a little bit better as we get deeper into June. As always, hope you guys enjoy these videos. Please add your comments or questions right below the video. I'll get back to all of those tonight or tomorrow before the open, and happy trading.